Hello, hello. How's everybody feeling? Are we good today? Everyone, who is at the after party? Okay, we're gonna need a better turnout tonight, guys. I know it's a lot of fun because there's so many girls there. We've got an awesome lineup, like they said. Friendly reminder, we're using the hashtag #TCDisrupt. Tweet to me. There will be a special prize tomorrow for my favorite tweeter of the conference, and you're gonna love it. Our first panel is pretty awesome. I've actually been trying to get coffee with Ben Lerer for like 4 months, and now he's here. So I'm gonna corner him backstage, but before that, Anthony Ha is actually gonna come out. And we have the full Lerer Hippeau Ventures team, which they've never really done a panel, all 4 of them together. So it's gonna be a real treat. So please welcome Jordan Cooper, Eric Hippeau, Ben Lerer, and Ken Lerer.
So yeah, you guys are not Lerer Ventures anymore, not just Lerer Ventures. Lerer Hippeau, do you want to tell us a little bit about why that's the case? Maybe Ken?
Because he's so good looking. That's it.
Did Eric just sort of put his foot down and like, all right guys, like this, it's enough?
You know, Eric and I have been partners for almost 10 years now. First at the Huffington Post and here, so it's long overdue.
Fair enough. So maybe one of you could just tell us a little bit about how all of you actually got connected, because I think you've all known each other for a pretty long time now, right? Maybe Eric?
Oh, well, I got to meet Kenny when I led the Series A through SoftBank in the Huffington Post. And then, as you know, I became the CEO. I liked the company so much, I became the CEO. And the fund, our first fund was started with these 3 gentlemen while we were doing the Huffington Post, and when we sold it to AOL, we decided to do this professionally. So that's how we got together.
And I mean, Ben and Jordan, you guys have known each other for a long time as well, right?
Too long. Way too long. We went to high school together in the city.
So, I mean, given that you guys have such, are so connected, is it hard sometimes to try to make sure that you're going outside of your circle when you're making investments and not just, kind of the same people and people you already know?
Well, I think we're all interested in sort of different things. Certainly Jordan. He likes totally weird things. I think part of why we work so well together is that we all have different interests and we all tend to sort of follow different sectors and frankly have different networks. And so ultimately sort of the charm of the fund, and I think the reason that we feel like we have a really good mix of companies is that we all go pretty deep in a specific area. So for example, Eric spends a lot more time with SaaS businesses and with ad tech businesses than any of us do. Dad spends a lot of time in news and media. I tend to do a lot of commerce stuff. Jordan does a lot of like consumer applications and bigger data stuff. And so when you put it all together, we end up with a pretty interesting portfolio because we all have our hands in different areas.
Jordan, do you agree that you like a lot of weird stuff?
I do.
Go on. What kind of weird stuff?
I'm just interested in people who are building a little further into the future. So, I mean, across our fund, we invest in a lot of incredible companies. Some of them are commerce-oriented. Some of them are straightforward consumer applications. I like to hang out with people who are thinking a little differently. Mm-hmm. And, sort of 6 months, 12 months ahead of what everybody's talking about right now.
So you talked about this idea that each of you has your own area of specialization. So when you actually make investments, do you all have to agree, or is it just one person really driving it?
But 2 partners have to agree to make an investment, and any of the partners can veto for whatever reason. So, look, we all have kind of our areas of specialty, but we all do this together, and we all understand each other's, businesses, as it were.
But in certain situations, like if someone has really strong conviction, I think we tend to trust that person's conviction and sort of let them pound the table. Obviously, if someone has really strong conviction against the deal, we take that into account as well. But I think we generally have the freedom to feel strongly and to, try to rally everybody around a company or a founder that we really believe in. And that flexibility allows us to do some deals that aren't sort of plain vanilla, really obvious ones, but some of our most interesting investments have come from somebody having really strong conviction and other guys getting behind it.
Has anyone ever used their veto? I can't remember.
I tried once.
Maybe.
We've threatened.
We threatened vetoes, but we haven't used it yet.
So no one's actually sort of gone with the nuclear option too. Yeah.
No, there's a lot of consensus. You discuss. We're also surrounded by a great team of professionals who help make the right investments and support the company. So it's a great discussion.
But we've talked each other out of deal. Like, if people have liked the deal and we've talked each other out, but no, we've never had a situation where someone says definitively we have to do this, and someone else says under no circumstances I refuse, and the person who loves the deal, truly loves the deal, has to walk away from it. That has not happened.
So if you were to guess, who's going to be the first actual veto?
Jordan.
Okay.
Definitely Jordan.
Jordan threatens the most, but we don't listen.
So Ben and Jordan, you guys also are CEOs of your own companies. Can you talk a little bit just about how you balance doing that with also being investors?
Sure. It's working incredibly hard. I think, we've been doing this since 2010, and I like to say that I put 12, 14 hours into a day building my company, and then the other 3 that normal people hang out, those are the 3 that I'm spending working on our portfolio or thinking about new concepts.
Does that mean you don't hang out?
Jordan does not have a friend in the world.
I'm trying to hang out more.
These guys are your friends.
For sure.
But I think for me, I consider investing and operating to be totally complementary. I think really specifically because the kind of companies that I tend to spend my time with on the investing side are ones that are sort of in and around the intersection of content and commerce, or some SaaS businesses that service content or commerce businesses. And so when I'm spending time and meeting entrepreneurs or CEOs of companies that we would conceivably invest in, I'm always learning and sort of making myself a better operator. And I think it's also really valuable to just get out of the vacuum of your own company. When you're building a company, particularly in the early days, I think, you're so obsessed with it and you're so in the weeds that you sort of, you convince yourself that like Thrillist is the homepage of the internet. You're like, you just assume everyone starts their day there like you do. And in reality, seeing these other companies just opens your mind to all the incredible things that are happening, and getting to step out of the business, actually, like that headspace, it makes me a little bit more focused when I'm back in the business.
Also, our operating companies kick the tires when we're taking a look at possible investments. So we'll meet with an entrepreneur, and then we'll say, why don't you go over and talk to the Thrillist guys, or why don't you go over and talk to the BuzzFeed guys, or why don't you go over and talk to somebody else? So that's very useful.
Mm-hmm. So changing gears a little, just wanted to talk about something that was in the news recently, which was there was reports that BuzzFeed and Disney had been in talks, acquisition talks. And Ken, I know you're the chairman of BuzzFeed. Can you shed any light on that?
I probably can, but shouldn't, or I'll get in trouble.
Well, can you maybe then talk a little bit about where you see BuzzFeed going from here? I mean, do you think it will get acquired at some point?
Well, John would like to continue to operate an independent company. He's said that a bunch of times. So that might mean a different kind of exit or cash out than selling to somebody. So you can use your imagination there. But the company is doing terrifically well. I suspect that they'll double their advertising again this year. Their traffic is about 140 million, maybe. I don't know if I'm 150 million. Anyway, it's doing very well. So they're on a great run, and they're expanding internationally. So everything's good at BuzzFeed.
So when you say I should use my imagination, I'm sort of imagining maybe an IPO? Is that?
Well, there are a certain number of different possible exits, so I guess that's one of them.
Okay. We'll move off this in a second. The last question was just to the other part of people were saying that one of the numbers that was being discussed was like a $1 billion valuation. I mean,
you could keep trying.
Okay.
I hate to say I'm not allowed to answer questions, but as chairman, I'm not allowed.
But you're the boss.
Yeah. So, there were a lot of stories written about that. There's always some truth when a whole bunch of stories come out on the same subject.
Okay. So it's true.
Moving along.
Well, let's talk about a little, slightly less known portfolio company, which I think, Ben, you were sort of involved with, which is Casper, which is a mattress company, which I love to talk about. And not in depth, I just like to say they invested in a mattress company, just sort of let people kind of stare at me. So do you want to tell us a little bit about why you did that?
Absolutely. Well, this is one that's very, very close to my heart. I probably about a year ago came to the partnership and said, I think we should start a mattress company for lack of a better, the quick and dirty would be like the Warby Parker of mattresses. And Warby's one of our early portfolio companies and obviously sort of iconic in how they've disrupted that industry and, the glasses industry. And we said, we think mattresses are totally ripe for disruption. Like buying a mattress is one of the most epically shitty experiences in the whole world, and nobody likes buying a mattress, and it's just a space that's totally ripe for disruption. And so we've incubated a few businesses out of Lerer Ventures, Hippeau Ventures. And
you're still getting used to it.
Yes, we're getting used to it.
Rolling around in the mouth.
We're getting into it. But we spent some time doing research actually, and we hired a guy who spent a month or two doing a deep dive on the industry and in fact identified that there was a really big opportunity. It turned out the guy who was helping us out wasn't necessarily the right fit to be the founder of the business, and so we sort of abandoned the project because we didn't have anyone to lead it. And a few months later, the guys from Casper, which at that point I think was called Dukes or something like that, it wasn't called Casper, came in and said they had this idea to start a mattress business. And what was really unique about the team was they had a mix of experience actually making and manufacturing and selling mattresses prior to starting this business, and they also had a really refined sense of the kind of brand that they wanted to build and the price point and just sort of the story that they wanted to tell. And we've made a series of investments in very brand-driven, vertically focused commerce businesses that have all done pretty well. And so this was an easy one for us to lean into and lead. And they launched about 2 weeks ago and have had a unbelievable response, and I don't know, I probably can't go into the specific numbers, but they've.
Or you could.
Well, I could, I guess. Well, they've exceeded their sales expectations many times over, and just burst out in a really amazing way. And the team has come together incredibly well. It's go to the URL, caspersleep.com. It's amazing. I've been sleeping on one of the mattresses for the last 3 or 4 months, and aside from the fact that they told me last week that I actually have one of the ones that was pre-getting their fire certification, so that if I will potentially burn to death in bed, it's a really comfortable mattress.
Yeah, their PR person was really excited that you just said that. So you mentioned this idea that we were talking a little bit about backstage, which is sort of really sort of brand-driven startups. Is that something that's important to? Did Ben focus on specifically, or do you feel like that's kind of important across the firm?
Well, obviously Ben does a lot of commerce, but brand, if you can establish a brand, that's one key attribute that will stay with you forever. And so I think that we prefer commerce businesses that have a brand attached to them that makes something original, as opposed to retailers.
But that's also one of the strengths of New York startups in general. We talked a little bit about this backstage. New York tends to have one of the, design and sort of brand conscious founders is something that you typically find in New York, and we're a very New York focused firm. And so I think we probably do over-index, generally speaking, with companies that are very conscious of brand.
So one of the other portfolio companies I wanted to talk about was NowThis News. Who sort of brought that in? Is that Ken? How many of you have actually heard of NowThis News? Not too many. Well, do you maybe just want to explain a little bit about what it is?
Well, we started NowThis News. We didn't bring it in.
Oh, okay. Sorry.
So we, within the fund, we incubate companies, and I think we've incubated about 4. So here's the theory behind NowThis News. The future is mobile, the future is social, the future is video, and we wanted to start a company where you could have news in your pocket, video news in your pocket, where you could share easily. So we produce 15-second videos. We're going to get up to about 60 a day in about a month, where you can see the headlines in a short video that hopefully is very social and 100% mobile product. So that's what is in a sentence. NBC came on as a partner about 3 months ago, and Mondelez, which is the old Kraft company, came on, and we're producing real-time social video news with brands now. So it's going quite well. And we hired Sean Mills, who was the CEO of The Onion, to be the CEO, editor-in-chief and CEO, and the head of production at Vice is now head of production, and the head of social advice is now the head of social. So we're bringing on spectacular people, and we'll see how it goes.
So you mentioned Vice a couple times and stealing away a couple of their people. We had the CEO of Vice on stage yesterday, and he talked about this idea that there was this perception that most video is just going to get, especially younger people just want very light, very short videos, but Vice hasn't found that to be the case, that they've been able to get views on fairly long, in-depth videos. Do you feel like things are going to move more in the direction of just short and lighter, or is there room for both?
No, there's totally room for both. There's room for curated news, there's room for investigative news, there's room for 15-second videos, there's room for, an hour-and-a-half documentaries. You just have to understand what the distribution channels are for each of those forms.
Yeah, with NowThis News, we've chosen to focus on some of the newer distribution channels like Instagram and Vine, Snapchat, WhatsApp, and the kind of content that's consumed on those channels is short, so you have to fit in to that particular mode of distribution.
I mean, is there a way to sort of get more depth or content into a short time frame, or is it really just going to be sort of a headline?
Well, we won't be making documentaries in 15-second snippets.
I mean, I'd be interested to see you try.
The quality of the content, though, on NowThis News, like if you follow NowThis News on Instagram, the quality of that Instagram video, which is a 10 or 15-second video, is incredibly high. I mean, it doesn't feel like what you might expect to find in your Instagram video feed. It stands out as being really premium, while also being truly native and not just a short video that happens to live in Instagram, but a video that is actually made expressly to live in that feed. And so I think that's what's really unique about the company, is taking one news story that is of great interest to a wide range of people and making it feel really native and relevant within a bunch of different distribution channels.
Well, we're going to do a deal with Snapchat in the not-too-distant future for NowThis News. I think we have the best content on Instagram, and really, it's just so you take your phone out of your pocket and you just scroll down continuous, and you can see what's happening at that moment or all day long, and you can get the news in 3 minutes.
Mm-hmm. Okay. And there's this broader concept or trend right now of breaking not only content but also experiences down into smaller consumable pieces that are sort of either initially created or recreated to work in a mobile context. And I think that's a very important trend, even beyond video, beyond text. If you look at what Circa is doing, for example, something like that, even into more dynamic experiences. And I think that's a big theme that we're seeing.
Mm-hmm. So again, changing gears slightly, I think one of the other topics that's come up a couple times at this conference, I mean, I think it's sort of contractually obligated to come up at any tech conference, is just this idea that, there's too much money right now, the valuations are getting too high. I'm curious what you guys think about that. And we'll put Jordan on the spot first.
Too much money in what context?
Just in terms of going into startups and sort of driving up valuations, and that's not sustainable.
I don't know if I'd say too much money. I think it's definitely a wonderful time to be an entrepreneur, especially an entrepreneur who has established some semblance of traction. So certainly when we talk to our portfolio companies, if you're capable of tapping the capital markets, now's a great time to do it. I'm not like loathing any type of correction if that's what you're asking. But you know, it's definitely a good time to be an entrepreneur.
I mean, it's all relative. I'm not sure too much money relative to what we went through. Somewhat of a drought during the financial crisis, where there was no IPO of tech companies. Everything was kind of repressed in terms of valuations, and now we're seeing the markets open up. Some really great companies come out, some doing really well, some not doing that well. So I think we're coming back to some sort of normal period where tech companies are actually valued. You know, most investors in the public market would like to own pure play tech companies, and for a long time you didn't see that. So the public markets influence what we do as venture capitalists because it puts, you know, kind of a new roof on the pricing. We invest in such early stage that what happens, these fluctuations in the later stages really don't affect what we do. You know, the pricing of our companies at the early stage is pretty stable, has remained stable for the past few years, particularly here in New York, where we do 70% of our investments. And these companies will take a few years to mature and then to reach higher valuation. Who knows where those markets will be then?
Mm-hmm. You said you guys do 70% of your investments in New York?
Yes.
Was that always, I mean, was that a conscious choice?
Yeah, we're New York based. We love New York. We think there's tremendous opportunity. We don't particularly like to travel for work.
So we're going to have a hard time getting you out for San Francisco Disrupt then?
Well, the 30% that we don't do in New York, we actually do in San Francisco, but mostly by people inviting us to join their syndicate because they would like to see a great investor on the East Coast.
Mm-hmm. How do you guys feel about where the New York startup scene is right now? I mean, there was a piece in the Times, I think a few weeks ago, about this idea that it's still a bit immature and maybe not quite where people had hoped. Do you agree with that?
Well, I tweeted that
was an
a
immature
story.
piece, I thought.
Okay.
Go ahead.
No, you know, the idea that you need to have billion-dollar valuations, like you know, we don't have a Google in New York, although we have 3,000 Google employees. We don't have a Facebook in New York, etc., to drive innovation in a city of the size and the diversity of New York just doesn't make any sense. Hopefully, we will get those valuations in the future, but it's not necessary in order to have a vibrant community.
Do you have a thought about which company might be the first to get to that level of valuation?
Probably Thrillist.
Almost there, right? So on the topic of New York, I know that the new mayor, Bill de Blasio, is going to be giving a speech. I don't know how plugged into politics you guys are, but he's going to be giving a speech about tech policy at Internet Week, and I think it's going to be sort of his first big presentation about that. I mean, do you have any thoughts in terms of what you'd like to see from City Hall in terms of encouraging tech in New York?
It's all yours.
Well, you know, the Bloomberg administration was very supportive of the tech community without giving any handouts. This is really important to, you know, none of us are looking for tax breaks. None of our companies want tax breaks or particular favors. What we want is a better infrastructure, better broadband, better tech education in our school system. You know, we have 1 million kids in our public school system, and we don't teach them technology. We teach them languages, we teach them all kinds of things, but we don't teach them technology. So that's a shame. You know, we're kind of wasting a whole generation. So what a city is supposed to do is to provide the best infrastructure. Broadband and education is the modern infrastructure that we need. So if he's supportive of that, we will definitely applaud it.
One of the other things that was said earlier at Disrupt that Fred Wilson said was when he was asked about the New York startup scene, which is again a contractually obligated question, was basically that there's been a shift towards more enterprise companies recently. Do you agree with that? Ben, you're kind of nodding.
I think we've seen a bunch of enterprise companies, and we have a large handful of enterprise deals that we've done over the last year or so. I think.
But I don't think that's not New York specific. Like that's just a broader trend. You had this like deep innovation in consumer applications, and then sort of the markets generally shifted towards enterprise. And I think the core of New York, we have like an incredible creative community, an incredible design community. One of the big reasons why this market blossomed is because it became a lot easier to build an application and productize that creativity. So I think for the long haul, like if we're gonna win and lead, it's gonna be in creating like amazing consumer experiences, and then that DNA flows into enterprise, and there's the consumerization of enterprise, and those design principles applied to really sleepy industries. So I think we'll be like just give it time. You know what I'm saying? Like this burst is less than 10 years old, and the great companies that are created over a decade. So I think it's not really a New York enterprise thing. It's just sort of like a cycle in the market more broadly.
But it does favor New York, because New York is the center of a lot of large segments of the economy, large industries. And the consumerization of IT we're just seeing the tip of the iceberg. It's going to sweep through everything. If you're in a public company or any large company and you have to work with your IT department, you know that they're completely bogged down maintaining old code, spending huge amounts of money and not really doing anything that's advancing applications. And all you need to do is to develop the next generation of apps using consumer tech. And it's easy to do, it's cheap, you can rent it as a service, it's in the cloud. And that's really where all of this is going. And it does favor New York, given just the size of companies that we have here.
Yeah, that story in the Times was a ludicrous story, actually. It's a wonderful place to invest. All media here, content is here, advertising is here, great product development here. We saw 1,050 companies last year. We invested in about 50 of them. Things are going tremendously well in New York. It couldn't be better.
You said you saw 500 or 1,050?
1,050. I didn't personally see 1,050, but Hippeau Ventures saw 1,050 companies.
We saw way more than that. We actually physically spent time collectively with 1,050 companies. Many came across the transom that didn't actually get there.
So in addition to sort of being kind of everyone thinking of you as the New York guys, I think a lot of people also think of you as media guys. And I was just also kind of curious if, since you invest in so many of the newer companies that are trying to disrupt legacy media companies, how you look at those older companies. Do you think any of them are doing a particularly good job in terms of the transition to social, to digital, and to mobile?
I actually think the New York Times has done terrifically well with its website over the last 18 months, and they're iterating, and the new products are good. I think the Times is doing a terrific job, to name one company.
The handicap that the legacy companies have is at least twofold. One is they're public, so they're focused on next quarter results, and it's all about cash flow. And it's difficult to think long-term if you're thinking about your next quarter's cash flow. And then secondly, in order to be a media company going forward, you have to be a tech company first. You've got to build yourself as a technology company. You've got to populate yourself with engineers and tech people, and that's got to be your foremost thought. So when we start a media company or when we invest in a media company, these are tech companies first. Huffington Post was a tech company first. BuzzFeed is a tech company first. Policy Mike and so on, all the portfolio companies. So it's very difficult for these companies to put themselves in that mode, in that mentality.
Cool. Well, I think we're out of time, so thanks for joining us.
Thank you.
Thank you.
Have fun.
Thank you.
Thank you.